Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the OECD says we may be heading for a war-induced global slowdown rather than a war-induced global spending spree. But financial markets have turned risk on. Now they know where the US Fed is headed. But first, last week's initial jobless claims data in the US came in lower than expected at 203,000 and now 1.8 million people on these benefits, a multi-generational low. That's a 52-year low. US industrial production data for February came in exactly as expected with a modest rise, but it was held back by mining data. The factory production data was really rather strong, especially for business equipment. Construction data helped too. Also moving up is the factory survey responses from the Philly Fed's Industrial Heartland region. It is expanding in March with new orders and production higher, but cost increases came in more widespread, they said. That bullishness was also reflected in their new housing starts data for February, which came in way above expectations. But there was a fall in their new building permits, which at first blush seems counterintuitive until you realise it was only slightly off a record high. Elsewhere, there have been a set of central bank rate echoes after yesterday's Fed move. Hong Kong raised their policy rate by 25 basis points to 0.75% in direct response to the Fed move. Taiwan did the same, increasing theirs by 25 basis points to 1.375%, and which frankly was a bit of a surprise. Indonesia left theirs unchanged at 3.5%, and the English central bank raised theirs by 25 basis points to 0.75, also mirroring the US Fed change. The war in Ukraine could cut global economic growth by more than 1 percentage point in the next year, the OECD says. It unsurprisingly sees a deep recession in Russia ahead. It also warned that the conflict could push up prices globally by about 2.5%. In Australia, they added 77,000 jobs in February, and their jobless rate fell from 4.2% to 4%. In February 2021, it was 5.9%. Better full-time jobs rose 122,000, while part-time jobs fell 45,000. The US Treasury 10-year yield opens today at 2.18% and reversing much of yesterday's Fed-induced initial rise, down 6 basis points from this time yesterday. And the price of gold starts today at $1,944 an ounce, recovering all of yesterday's sharpish fall and up $47 from this time yesterday. And oil prices are sharply higher today too, up $7. In the US, they're now just under $101.50 a barrel. The international Brent price is just $104.50 a barrel. And the Kiwi dollar will open today more than 1 cent firmer, now at just over 68.9 US cents as commodity currencies move up again. But against the Australian dollar, we're almost 3/4 cent lower at 93.3 Australian cents. Against the euro, we're just over 62 euro cents. That all means our trade weighted index starts today at just under 73.9 and 50 basis points higher. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.